Hello, I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOls. Welcome to this special webinar relating to crowdsource funding, helping your company raise capital painlessly. Doesn't that sound wonderful? Crowdsource funding's targeted at small proprietary companies, inventors, and from the 19th of October, these types of businesses, small proprietary companies, have been able to raise capital. And indeed, some have. The intermediaries that have been appointed by ASIC are active in the marketplace. There was originally 7, and then in October 2018, ASIC added a further 6. So there are 13 intermediaries operating around Australia. But let's look at the scorecard. What started to happen? Success, $18.3 million has been raised by 22 companies. This is a great start to a new market. Would you like to join them in raising capital? If so, please settle down, and I hope this webinar will give you an overview of what's required. And the first big sell item is no securities required. You can raise capital without having to pledge your personal assets, your mother-in-law's assets, or your best mate's assets. And there's no personal guarantees to be issued to anyone. And there's no monthly repayments have to be paid to the bank. Let's look at some of the companies that have already raised capital. Now, the reason I'm going through this with you is to give you some idea of the breadth of businesses who have been actively involved in attempting to raise capital in Australia. One of them's a digital bank that's already raised $2.4 million and is currently back in the market to raise further capital, because a company can raise up to $5 million in a 12-month period. A company that makes premium socks and underwear has raised $363,000. A digital platform that matches moviegoers with empty seats, $294,000. A gin manufacturing business has raised $932,000. A flat water bottle designed to fit into your bag, $383,000. An add-on for luxury brands has raised $294,000. A global currency app and prepaid Visa card that you can use anywhere has raised $248,000. Is this giving you any ideas? An investment in a gaming brand has raised $361,000. A leading soccer brand relative to soccer balls and soccer clothing has raised $316,000. An Australian take on modern Japanese fusion has raised $184,000. Interesting stuff, isn't it? Let's look at some of the companies that are currently trying to raise capital. A craft beer manufacturer, a surfboard design business, technology to supplement livestock, health supplements, manufacturers and marketers of Australian-made spirits. The liquor industry is doing quite good out of all this. Travel solutions using technology, cloud-enabled student tutoring, multi-venue medical services business, patented safety device that was seeking capital after their first sale. That may have meant that that company had been involved in the federal government's entrepreneurs program for accelerating commercialization, because accelerating commercialization will only fund up to the first sale being made. So perhaps that company has had some benefit from that grant and is now seeking to raise capital. I like this one. Forget the words internet gaming. They're an established company seeking funds to expand into new networks and markets. That could apply to virtually any business in Australia, couldn't it? An established company seeking funds to expand into new markets is what you could call that description for virtually any type of business in Australia. So if you're sitting there saying, oh, I don't know whether we're going to be able to fit into something like this, I think virtually every business can. We've got another craft beer and wine company. We've got a company that's planning to create tomorrow's houses today because they're delivering on the future of zero carbon housing. An immersive theme park combining education with fun. Sounds great for your kids or your grandkids. An Australian premier shave club. Craft beer and wine. I told you there's a few of them. And last but not least, a network of professional funeral planners and celebrants. And I think that's an appropriate end on this little overview of what's going on in the market. There's a lot of companies out there now trying to raise capital. You've got to remember in Australia, we're playing catch up. The rest of the Western world has had the ability for small and medium-sized businesses to be able to raise capital in this type of methodology for the last 6 or 7 years. And finally, we're underway. This is big. It's a great improvement. In fact, I think it's the biggest improvement for small and medium-sized business financing in Australia for the last 35 years. You might ask, what happened 35 years ago? Well, the Section 708 of the Corporations Code was introduced 35 years ago. That enabled private companies to legally raise some capital by being able to talk to people. Maximum of 20 investors from a maximum $2 million total investment in a 12-month period. Unfortunately, it does have some restrictions, and a company can soon outgrow that. But it was a great improvement. So let's look at the legal tests that apply to crowdsource funding, in particular from your point of view as a director or a senior manager or a shareholder or an advisor of small businesses and medium-sized businesses. The legal test, group turnover and sales has to be under $25 million. The gross asset value of the business has to be under $25 million. The company nor any of its associates can be listed on a stock exchange anywhere in the world, and the company cannot be included in a financial market operated outside of Australia. Now, the subjective comments that I would make is this company can operate in any type of industry. Within the legislation, there is no restrictions. And there is no age specification. So it could be a startup, only formed a few weeks ago, or it could have been in business for 95 years. The real important aspect in all this is, does the company have a vision? Does the company have an energetic management team? Is there commitment to put the money that your company might be able to raise from investors to work to expand the business's operations? So phase 2 is your company interested? Would you want to go down this path? And one of the first of the 10 additional items that we think a company is going to need to be able to at least tick one of these is your company wanting to scale up? Do you currently have a turnover of $2 million and you're looking at the future and you're saying, gee, I'd love to have a turnover of $6 or maybe $7 million. And if we could achieve that over the next 2 to 3, maybe 4 years, that would be great. Have you thought about the working capital requirements, the extra investment you're going to have to make into your stock, your debtors, perhaps some capital expenditure for new plant and equipment? And then the big question, where are you going to get that money from? What assets are you going to secure? It's going to be very difficult to deal with banks for the next few years, so the experts tell us in the aftermath of the Banking Royal Commission. So perhaps a company that's interested in scaling up might be interested in trying to raise some capital. What about an early stage, high growth and disruptive company? Some of you might well be running this type of business. The market does like disruptive companies as long as the potential investors can get some idea of what you're trying to do, and as long as it makes business sense. So perhaps you're interested. But you might have a business that just wants to expand. You've created a effective business in your current location, and you're saying, well, we can multiply this and have another 3 or 4 similar businesses in other parts of Australia or even the state that you operate in. What about acquiring other businesses? You know of competitors or colleagues who are wanting to retire or sell their businesses for some reason. Are you interested in trying to acquire those businesses? Where are you going to get the capital from? Vision for the business I've listed as a separate item, but you could argue that it should be part of each of these items we're talking about, because it's going to be very difficult to imagine that you will be able to raise capital unless you have a clear vision where you're wanting to take your business. There needs to be a fire burning in your belly of wanting to achieve some interesting, good results for your business. So do you require funding? If you've already got a lazy $2 or $3 million sitting in the bank, you probably don't need any funding. But geez, I've been an accountant for a long time and then a business advisor for the last 20 odd years. I haven't found too many companies in the small and medium-sized business community that have got a lazy $2 to $3 million sitting in their bank account. And most of the ones I seem to communicate with don't really have any spare borrowing capacity in their current security arrangements. So how are you going to do it? So do you need a capital injection to facilitate funding for something like a shareholder succession? You know, people who are currently in the 60 to 70 age bracket didn't have access to superannuation 30 years ago. The only people who got it then were politicians, people that work for government departments and government entities, and the top echelon in public companies. Most people in small, medium enterprise did not have access to superannuation. And what business people used to do was reinvest in their companies all the time. I had clients that used to say to me, oh, we'll put that spare $50,000 we've got left from the year, we won't take it out of the business, we'll put it back in. That become their superannuation fund. But in 2019, it's a lot more difficult to sell businesses than what people thought it would be by the time they got to this stage of their careers. So perhaps this business that's been started by you, you've now got some children working in the business and perhaps some grandchildren. Crowdsource funding might help achieve a succession to allow you to implement a retirement strategy and to then be able to have your children and grandchildren involved in the business, and ultimately they might be able to buy those shares back from the people who have invested at this stage. Does the company have borrowings? Have you got loans that are secured on first mortgages on your own property? Well, if so, you probably haven't got too many worries unless you're wanting to borrow more money. But if you've got loans that are secured on someone else's property, you might like to be able to pay those people back. It might be your mother-in-law, it might be your parents, and they might want their money back. It might be a good mate who helped you out. In November 2018, the Financial Reviewer had an article which was attributed to a comment that had been made by the Australian Small Business Ombudsman, Kate Carnell. Ms. Carnell had indicated that her research had indicated that 26% of the funding for small and medium-sized businesses in Australia was being funded by what she called the bank of mum and dad loans. Interesting concept. 26%. Now, some of those parents and grandparents might like to have their money back. They may want to retire themselves. They may have to move into nursing homes and they need a substantial amount of money to make that entry. They may want to hang on to their family home. how are you going to finance that if they make that sort of phone call to you one day? You may have loans from family and friends. You may have high credit card debts that you'd like to get rid of. So as directors of your company, would you be interested in looking at crowdsource funding to implement these sort of strategies? Or are your company too old, too big for early stage innovation company? You may have developed a new product, process, or service. Your company may be aged over 3 years of age. Expenditure might be over $1 million per annum. Income's over 200,000. In that case, you're not eligible for the special category of being an early stage innovation company, which enables your investors to receive a tax offset and potentially avoid capital gains tax when they sell those shares. But these types of companies that miss out on ESSIC could be very interested, and if you're one of them, crowdsource funding, I think, is your alternative to be able to raise some capital. So let's look at the capital raising. You can raise up to $5 million in a 12-month period and then go back to the market again the following year. You don't have to raise the $5 million in one complete tranche. It can be split into a number as long as the aggregate does not exceed $5 million in a 12-month period. And it could be a combination of Section 708 capital raising, which I referred to before, and crowdsource funding. That can be done. So let's look at the legislation. A crowdsource funding offer can only be made by the platform, the website, of an appointed crowdsource funding intermediary. These businesses are appointed by Australian Security Investment Commission, ASIC. There's now 13 of them. Unfortunately, ASIC do not publish a list of who the 13 people are. I'm trying to put a list together. Currently, I know 8 of the names. I've got no idea why ASIC are not publishing that information. These intermediaries must have an Australian financial services licence with a special endorsement that they're authorised to conduct crowdsource funding. They need to be able to publish a crowdsource funding offer document, which is a de facto prospectus to which any investor that's contemplating investing in your company must go to. And they have to acknowledge that they've been given the investment warning, which is a very important component of the Australian government's legislation. Now, the offer can only be available on the intermediary's website for a maximum of 3 months. It could be for a lesser period, but a maximum of 90 days. So the main features of the crowdsource funding bill, from your point of view as a company director, senior manager, shareholder, is that it is pitched at retail investors, commonly known as mum and dad investors. The maximum amount that a retail investor can invest into your company under crowdsource funding legislation in a 12-month period is $10,000. They can go and invest in 10 other companies if they like and invest $10,000 in each of them and $10,000 into yours, so they invest $110,000, but the limit is $10,000 per company. They do have an unconditional right to withdraw their offer to subscribe to shares for 5 business days after they've signed on and handed over their money to the intermediary. In that case, the intermediary has to destroy their application and give them their money back. I think it's going to be very important if you want to understand this process as a company director, senior manager, or a shareholder, that you understand what is happening in this legislation, crowdsource funding, but also what's happening with corporate governance and other issues. So part of the cost, if you like, of being involved in a new concept like crowdsource funding is the desirability of improving your own knowledge about how this new phenomenon called crowdsourced funding equity raising operates. And we have developed a range of material that we've packaged into smaller packages to enable you to undertake some education on crowdsourced funding. And we have a special New Year discount on this material, a 40% discount that's available to the 28th of February 2019. So let's look at the packages. You can get some free material. I'll just go back to that. The Small Medium Enterprises Introduction to Crowdsourced Funding. We've got a package of 3 articles to try to set the scene, to tell you what crowdsourced funding is all about. And you can go onto our website, www.esssmallbusiness.com.au/crowdsourced funding, and click on to that material and download it for free. Please do it now, or as soon as this webinar is over. But then we have Understanding the Crowdsourced Funding Offer Document Process. We've got a special on that at $60, including GST. And it's half a dozen articles which will take you through what the offer document's all about. And we'll overview how that's prepared so you as a director understand that process. That's $75. And then we have a very comprehensive package which takes you through the steps on preparing that offer document. Because this is the de facto prospectus. Normally $399. You can have it until the end of February for $240, including GST. And if you're in business, you'll be able to claim the GST back because this is professional development for you. So it's a tax deduction for this expenditure. It's very important that you understand the responsibilities, the duties, but more importantly, the powers of the crowdsourced funding intermediary. So we've put a package of articles together for that. That your special investment to the end of February is $75. It's very important that investors, so those of you who contemplate becoming shareholders in some of these companies, understand what all this is about. So you can subscribe to that package also. And we also have a summary of what happens after hopefully your company has raised its capital. What have you then got to do? The share certificates are going to be issued. There's a declaration of shares allocated, got to be submitted to ASIC. Share register's got to be updated. You might have 300 new shareholders, depending on how much capital you set out to raise. So you can subscribe to that for only $18. But you need some of the other material before you get to that. Or you can combine the package. Now, normally we would sell this package in total for $7.99. So that's everything that I've talked about. But your special price to have that package is only $480, including GST. So do you want to subscribe? I hope you do. I hope you're interested because this is professional development education for you. I think even if you're not interested at this stage in crowdsourced funding, it's a good idea as a company director or senior manager to have an understanding. Because I believe that this market is going to change the face of small and medium enterprises in Australia. And the quicker you become aware of all of the components of how this system operates, the better. Because what you might find in the marketplace is suddenly you observe that one of your competitors has got a new factory and it seems to have some new state-of-the-art manufacturing equipment, and you hear stories about the computer revolution that's going on in your competitor's business. And you might say, well, how did all this happen? Well, they may have raised some capital under crowdsourced funding. And I suspect they're going to be a bigger and tougher competitor to you in the marketplace once they have done that. So if you want to subscribe for any of the products that I've just outlined to you, please go to www.esssmallbusiness.com.au/subscription. And to obtain the New Year discount, please enter ESSSBC40. Sounds like a code they used to have in the Second World War, doesn't it? ESSSBC40. You're going to be able to click on and get access to these PowerPoint slides. So probably no need to have to write it down. So do you want to know more? To obtain more information on crowdsourced funding, you can go to our website, esssmallbusiness.com.au, and then click on crowdsourced funding, then click on learn more. And we have some information that's available there to give you an overview of what crowdsourced funding is all about and to give you an introduction to the various product packages that we have developed to assist you to have a far better understanding of what this new exciting development, which I've described as the most exciting development for small, medium enterprise financing for the last 35 years. And I could probably debate with some people that it's probably the most exciting development that's ever occurred for small, medium enterprise financing in Australia. If you require any additional assistance, please don't hesitate to contact us. So let's just summarize what would make you happy. I hope you are happy. It's a new financial year and we're making a reasonable offer to you to improve your knowledge and skill in this very important new area. If you're committed to raising capital by crowdsourced funding equity raising, and I hope I've convinced you to at least commit to having a good look at this, what would make you happy? Would you be happy in 12 months' time if you had raised the stated amount of capital that you set out to raise, the minimum amount? You can have a maximum amount as well, but if you raise what you set out to achieve, that target should always include the expenses of the capital raising, the fees you're going to have to pay the intermediary, and your accountant to prepare the documentation. So get your accountant to take you through and give you an idea what that's going to cost, and add that to the amount of money you're trying to raise for your own business, the amount that you're really going to put into your cash flow. You now have 170 additional shareholders who might own 20% of your company. Interesting thought. And hopefully you've got a board of directors that might comprise 3 people. You have to have 2 directors to be a crowdsourced funding company. Please look at this very seriously and end up with a board of 3 to 4 people. Bring in some people with outside expertise, business experience, who will act as a sounding board, an advisory board to you, to assist you to take your business forward. This is why public companies have boards of directors. They are there to add support, to give encouragement to the CEO of the public company and the key management people. They've got a very important role to set the strategies that the business is going to try to achieve, and then to monitor month by month actual performance against the preconceived targets. Shouldn't you have that for your company? I'm sure you will find that you will perform a lot better. And that's the sort of strategy you will be going into with crowdsourced funding, equity raising. But out of all this, you should have adequate cash reserves available. But if you raise, say, $500,000 in that first issue, 170 new shareholders that contributed $2,500 or $3,000 average, can be 10, but at this stage the average is around $2,200, and you've got a sum of money of around $430,000 or $440,000 after expenditure in the capital raising available in your business. In 12 months' time, you've probably got some of that left. But if you haven't, you could have gone back to the market to raise more. As long as you've got a worthwhile activity to invest that in that's going to grow your business, your wealth is then going to increase because you own a percentage of this company. And whilst it might have been watered down from 100%, hopefully the value of the business has grown. And that's the whole basis, because that's the bargain that your investors are looking at. If they put $500,000 into your business and then get allocated 20% of the shares, are you going to use that money to grow the business so that their equity in your business also appreciates in value? And sometime in the future, someone might want to take over your company, or you might want to buy those shareholders out by going back and making an offer to them at some future time. There's plenty of options that are available. And all of this has been achieved. You've got some extra shareholders, you've got cash in the bank, you've been able to do what you wanted to do. You've got a bigger board of directors which is going to be giving you advice and support without any security having to be offered to anyone, without any personal guarantees having to be offered to anyone, without any extra debt for your business, for your company, and no monthly repayments. That's what a lot of people tell me they like out of all this. No requirement for monthly repayments. Your new shareholders will have an expectation that you are going to run the business to the best of your ability and your team, and hopefully everyone will receive dividends, because that's, I'm sure, what you want on your investment in this business. But there's no guarantee. There's no fixed commitment. If this is what you want to achieve, I'd urge you to contact your accountant and have a discussion. If your accountant says to you, I don't know what you're talking about with crowdsourced funding, please ask them to contact me, and my details are a little bit later on, because we also are selling product packages to accountants to help them give advice. But unfortunately, some accountants will not be interested in this market. They are very preoccupied with preparing annual accounts and taxation returns. If you still want some advice, I urge you to contact our team at ESS Small Business, and we will advise you on what you should do. So if you want to know more, don't hesitate to contact us. You can go to the website and have a look at esssmallbusiness.com.au, crowdsource funding, learn more. Or you can telephone me, 1-800-232-088, or visit any of our websites. ESS BIZTOOLS is targeted primarily at accountants and business advisors, but you can go there and have a look. You won't be able to see our subscribers' areas, but you'll get an idea of what type of service we make available. Or you can go to our grant product, and if you're interested in obtaining government grants and your accountant cannot help you, we can help you, but you can have a look at that area. And we have the ESS Small Business site, so please visit it. Let me repeat something I've said a couple of times today, because I think it's very important. Crowdsource funding equity raising is the biggest opportunity that Australian small and medium-sized businesses have had in at least the last 35 years, some people would argue ever, to expand your businesses. But you're going to need to develop a strategy. You are going to need a team, a competent accountant to help you on that journey. And you'll need to invite some experienced business people to be directors of your company, to assist, to mentor, to give you some support and inspiration on this very important part of your journey. I wish you well. At the same time, even though the new year occurred 5 or 6 weeks ago, Happy New Year for 2019 from the team at ESS Small Business. We are here to service you. We have a wide range of other products. You can see them on our website. Have a great day. Goodbye.